The rand softening up to about 6.75 against the dollar this morning. Though at the same time, we've seen that euro falling below 143. So how would you rate the rand's performance given the weakness we've seen coming through for the euro?
Morning, Stephen. Rand has held up relatively well, but that's really only been against the dollar, still broadly weaker against most other currencies. We believe that that's really a function of the fact that although the euro weakened yesterday, the rand was supported by firmer commodity prices, and that really helped to keep the rand at relatively flat compared to where it had been. In addition, we also had better than expected reserves data released in the morning, and that also could have played into helping to support the rand a bit.
You said better than expected reserves data, but was there evidence there that the Reserve Bank had been in the market buying up dollars?
There certainly was evidence that the Reserve Bank had continued to acquire dollars in the month, but it certainly was at a far slower pace than what we'd seen previously. So the accumulation specifically of FX reserves was much lower than we've seen in February and March of this year.
How about the rand-euro movements in the meantime? With that euro weakness coming through against the dollar, have we seen the rand gaining ground against the euro?
We have seen the rand gaining a bit of ground against the euro, but that's really only been in the past couple of days, Stephen. As I mentioned, if you take a month view, the rand has been broadly weaker against most currencies, and that would include the euro, really only holding up well and strengthening against the dollar at this point.
Well, that euro falling really after Standard & Poor's cut Greece's credit rating, and of course that couldn't have come as much of a surprise, and we've had a few ratings as well. Do you think that we're going to see other agencies following suit? Do you think we could see that euro coming under further pressure?
Well, as far as the euro is concerned, we do see under further pressure. Our 6 to 12 month view is that the euro against the dollar could head as far as 120, and that's really because these sovereign debt risk concerns keep resurfacing and seem to intensify every time that they come back into center stage. So certainly the prognosis for the euro over the next year is fairly bleak. As far as Greece is concerned, it does seem increasingly likely that other ratings agencies may follow suit. There have been rumors for some time that Greece may have to restructure its debt, so the downgrading of its sovereign rating yesterday couldn't have been entirely a surprise to markets.
Well, all eyes really on the Reserve Bank here in South Africa this week. We have that 3-day Monetary Policy Committee meeting kicking off today. No surprises expected, so I suppose everybody's really just looking for the tone of the statement that comes out on Thursday afternoon from the Governor.
Yes, absolutely, Stephen. At this point, we still believe that the MPC are going to keep rates on hold. If you look at most of the recent data that's come out of South Africa, particularly on the production side, things looking a bit softer. Business confidence indices also trending downwards, most notably the Saki Business Confidence Index, things like the BER's Confidence Index. So those certainly do suggest that the growth outlook for this year is still quite weak. We've only penciled in a rate of about 3.7%, which is a relatively pedestrian rate for a developing country, and also just for South Africa, based on South Africa's history. So taking all of those growth concerns into account, we think that even though inflation is trending higher, the MPC is going to keep the interest rate on hold for this year, and we only see the first interest rate hike taking place in early 2012.
Of course, inflation trending higher globally. We're getting numbers out of China tomorrow and also out of the United States later this week. Do you think that's going to be a key focus for the markets, where those inflation numbers come out in China?
Absolutely, particularly with regard to China's inflation numbers, because we've seen the Central Bank of China repeatedly tighten monetary policy. They've been increasing banks' reserve ratios. They've also raised the benchmark interest rate, mainly to combat rising inflation. Inflation in China is at 4-year highs, but luckily, as far as consensus is concerned, inflation in China is seen. And that, of course, would be what everyone is hoping to see, and that may, in fact, signal that the Bank of China won't be tightening rates further at this point.